about Electronics Mart. Let's get a sense of where exactly is their business headed. We've got Premchand Devarakonda, the CFO at Electronics Mart, joining in on the show right now. Premchand, hi, good morning. Good to have you on the show. Help us understand what really is your sense about the on-ground demand that one has seen so far, whether or not monsoons are taking over the heat, and is that going to really have any impact on your operational performance in the next quarter?
Thank you for monsoon season. Actually, historically, second quarter is always a slack period for us because of the monsoons. And of course, of late, what is happening even due to heavy rains, there is water clogging across various locations. So that reduces the footfall. And we are prepared for this monsoon season. So if you look at the first half year's performance, there is going to be an improvement compared to the last year.
Okay, so that's the view coming in as far as the momentum on the ground is concerned. But could you talk to us about which categories are doing well and what exactly, which areas, etc., are doing better? If there is a bit of a divide in terms of tier 2, tier 3, any certain states and geographies performing better?
See, our base in Hyderabad is very high. So as a result, there will be a single-digit growth year on year. When we look at the other clusters like rest of Telangana, Andhra Pradesh, and NCR, there the growth is quite significant. It is in fact it is more than in fact 25% year on year. And when we talk about the categories, there is little slowdown in mobile segment compared to the last year. Otherwise, this year air conditioners did exceedingly well, and the rest of the categories have shown single-digit growth.
It's a question, right? Heat wave, of course, led to that high demand of ACs in a seasonal quarter. The rest of the categories, though, are single digits. So then is the demand or is the growth going to drop in Q3, Q4, Q2 to the levels of single digit?
See, these are not... see, when we look at that, even last year also, certain categories have shown only single-digit growth. So that is, if that is sustained, I think we are on the right path.
Right. Okay. Just reclaimed that 25,000 mark as well on the index. We were bound to hit that level. And there we are. Today, of course, it's been a lot of technology names which are pushing the index forward. You've got TCS, Wipro, TechM, Infosys, they're all pushing higher. HDFC Bank is also holding out well. So it's a clutch of IT and a clutch of these financial names which are really leading the Nifty up as we speak right now. But Mr. Devarakonda, coming back to our discussion, you had indicated the target to clock about 15 to 18% organic growth for the fiscal. With almost half the year done now, are you on track to achieve this? Would you be looking at upping this guidance level at all?
We are absolutely in a comfortable position in achieving the target we committed to the market.
Okay, and you talked about how you have a very strong hold in Andhra Pradesh, Telangana region. What's the plan to expand it further, let's say in the NCR region? What's going to be the split between south to non-south going forward? How many stores are you adding?
This year, we are going to add 10 stores in the north cluster and 20 stores in the south cluster. And we have been exploring the markets around NCR, like Western UP, Haryana, Punjab, and Uttarakhand. So there also we are focusing. And over the next couple of years, we are going to have more emphasis on the north cluster. That means if we open year on year 30 stores, out of which 20 plus stores will be in north cluster and the remaining will be in the south cluster. That is our master plan for the next 4 or 5 years.
Right. Okay. And could you also give us some color on what kind of same-store sales growth do you actually intend to clock in? Because we understand for the previous quarter, it's about 8.6% versus your targeted figure of 9 to 10. I'm sure you'll manage to achieve that 9 to 10% figure. Would you?
That is our target. We have to achieve that by hook or crook. And It will be above 8%. And if you look at this, if you take Hyderabad as a cluster, there the SSG will be around 5%. And in the rest of the clusters, we are going to have double-digit SSG. And combined blended SSG will be between 8 and 10. That is our target.
That's a view coming in. Just a word before I let you go on the impending festive season. What's the expectation of growth there? Do you think there'll be heavy discounting that the companies might resort to? How's the inventory level? What's the discount expectation and the expectation for festive season?
Expectation means like this
What are you expecting? Is it going to be a bumper festive season versus last year? Is it going to be on similar lines? How's going to be the discounting and inventory ahead of that?
It will be in the similar lines as last year, and we are ready with our inventory accumulation, and all stores are well equipped with the manpower as well as inventories. We are ready for this upcoming festive season, and expecting huge pent-up, huge demand during this festive season is too optimistic. But historically, we were having 20% year-on-year growth. That can be achieved this in the upcoming festive season as well.
Okay, so on that note, we let you go. Appreciate you making time and speaking with us. So that's the.
If you like this video, then like, share and subscribe to ET Now.